Hello, this is the CEO of Weisenbach Investments, and I'm going to do a market review here. So, we have slowly been rising right here on just kind of a low volume, fundamental based move, also seasonal based move based off different seasons of the stock market, because stock markets often go up during holiday seasons, and since it's Thanksgiving, what do you know? Today's the last day of trading, or major day of trading for the week. Markets are closed Thursday, of course, because of Thanksgiving. That means we're open Wednesday, but almost all the traders were clearly at home because there's no volume. But we continue to push slightly. In S&P, I think we're may see some weakness around this 1339 level. If we break that and break the 20 MA, I think we'll see some upside, especially explaining the fundamentals involved with the fiscal cliff, the pretty good earnings. You know, everything's okay, but there's some pretty bad stuff like in Europe. Another thing about Europe is UE is going to give over Greece about 15 billion. They're planning to do that. So that's a good sign in general for the euro especially. So let's just take a look at what the euro is doing. You see, euro is slowly rising, little trading, Thanksgiving holiday. Something else we might want to look at is USO, which is the United States Oil Fund. It's been rising so far, but it cut out down here when the turmoil in the Middle East. They're planning to have some sort of treaty or something. Yeah, they're trying to agree to some sort of truce starting today, but oil still had some move to finish out. We look at oil futures, they finished up a little better also. But you know, we did collapse on kind of that expectation. Let's see, what else do we have here? Let's take a look at corn and the dollar. I just got along agricultural through DBA. Corn is also looking pretty bullish. I'm starting to like corn. DBA is having this nice technical setup. We had pretty low volume, so there's a little movement to push it. But you know, DBA, it looks okay. Relative strength is starting to become pretty good. It's breaking the 20 MA. And, you know, agricultural is just kind of due for a recovery. You know, everything seems to be beaten down in agriculture, so it's time to buy it. Another thing on my watch list is again HYG, which I was long today also. It's performing okay. I made money today on it though because I went in again today. HYG, pretty good. Risk assets, you know, everything's okay. And of course, bonds, yep, continue to go down. So the thing about bonds is it did not break its 52-week high. That's where we saw resistance, so we came off. Okay, let's think. What else? Yeah, CMG is nice, having kind of a nice cup pattern right here. Especially, this is especially going to be bullish as it breaks 281, and I like its bounce off 259, 260 around here. They announced they're going to start buying back stock, so Chipotle will be along from here, especially as the company is buying back their own stock because it's so cheap. Technicals are great, and short-term fundamentals have a pretty good picture on Chipotle. And you know, I did skip something that I should have looked at. I did not look at soybeans or wheat. Soybeans, I'm pretty pretty worried about soybeans because of its relative strength. It's not very good at its poor relative strength compared to corn. It's this in wheat. I'm still kind of worried about wheat. Also, I would much rather be long corn. But in the overall agricultural picture, I would definitely be long agriculture. Like I said again. I did not look at natural gas. Natural gas is a much better long for me than oil actually would. Continued demand is pretty good in it. I don't know if you realize, but the U.S. will be able to function off its natural gas and oil in 5 to 8 years. So natural gas is obviously in more demand. We're also getting into the cold season, winter, and they're going to start using more of it. And lastly, gold will not, let's not make it long. So you have time. Then we have gold. Gold, kind of weak. It looks pretty shortable to me actually because of this resistance. I'm not too happy with it because money is kind of flowing in the stock market. But it's actually been okay correlated to the stock market, but I would rather be long stocks and I would be short gold. And let's look at some other components. Lowe's jumped up because of its good earnings report. I think it's kind of high for me to have any opinions. Gilead, it had its great earnings report. I think it's kind of exhausting its move though. So we're going to need some higher volume to push Gilead anywhere farther. We might as well take a look. HPQ, they had a pretty junky earnings report, so they just came off. They're recovering. Coca-Cola, it had pretty good earnings, and I kind of like its jump back into this earnings area. So since it's jumping back into earnings area, I would be long Coca-Cola for sure. Holologic announced a pretty junky earnings report. I believe, yeah, it was pretty junky. We went all the way down to here. Holologic, it looks pretty shortable to me unless we can continue this upside momentum. And then Allstate, I looked at it because of Hurricane Sandy. Fears are starting to go away and it's looking okay. And then lots of technology stocks are doing pretty badly, but Facebook is beaten down enough that it's trying to recover from its great earnings report. So it's getting back to earnings level. So Facebook is of interest to me. It is kind of going against its sector though, because most of the tech sector is going down, but we're starting to see some recoveries over any overreaction that we have seen. So thank you for listening. I hope you enjoyed this video.